Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta. And Ekta, looks like the losses are really widening now, right? We saw that break into the green around an hour ago. But since then, it is a 60-point slip that we are seeing on the Nifty. So below that 17,600 level for now. We're also seeing slips come from the broader market. So while it is still under, overperforming what's happening on the frontline index, you are seeing some selling pressure come through in the mid-cap names and the small-cap names as well. So the advance decline now absolutely neck-to-neck after it was holding up well in favor of the advances all through the day. Of course, a lot of selling in the IT is what we've been talking about in the IT names. But in the past few minutes, it is also the banks which are really coming under pressure. So IndusInd is down over 2% right now. A lot of the other smaller names as well. The overall Nifty Bank is down almost 200 points. So Ekta, we're definitely seeing some pressure intensify over here in the markets.
Hi, Pavitra. Yes, absolutely. The two pockets of strength relative to what we saw in terms of the Nifty and the Sensex in the past couple of trading sessions were the financials as well as the broader markets. And now they are coming undone. So like you mentioned, the advance decline ratio is absolutely even keel as we speak. And not to mention that the bank Nifty is just about lower by around 187 odd points. We do have a couple of banking numbers to watch out for, which will be on Saturday. So we have ICICI Bank as well as Yes Bank, which will be releasing numbers after HDFC Bank. That will be important to see what kind of trend the broader banks are, rather even ICICI Bank, which is a frontline bank, and Yes Bank are showcasing. But any which way, we do have a lot of ground to cover in terms of queries. Joining us this afternoon, we have Parthiv Shah, who's the director at Tracom Stock Brokers, and Rajat Bose joining in on the technicals. Afternoon, Parthiv as well as Rajat. Welcome to the show. Let's kick off the show with the first query. We have Sivam Kumar Ganesan, who writes to us from Kerala. He holds 20 shares of Asian Paints, which he's bought at around 2541. Long-term investor wants to know what to do, whether to hold or sell this particular counter. Making money currently, Parthiv, on Asian Paints. But what would you recommend? Do you think that there's more upside from current levels? Is it a stock that you just keep in your portfolio, forget about it, look at it 5 to 10 years later?
Good afternoon, Ekta and Pavitra. Basically, I think, yes, absolutely, I do feel that Asian Paints is a hold and his price and entry point is reasonably good. See, the challenges that this company has faced so far, and it is not only Asian Paints, despite being the market leader, having almost 50% market share, and in the decorative segment, where almost 84% of their revenues come, they have 60% market share. And this market leadership in the Indian market has stayed for the last 40 plus years. Not even any of the MNCs have been able to disrupt Asian Paints. And there's been a lot of chatter regarding, a lot of new companies like Grasim talking of a 5,000 crore gross block expansion in the paint segment. That is yet to come. It will take some time. But I think the pedigree that Asian Paints shares in terms of the brand and in terms of the different varieties of coatings that they offer, I think it is very difficult to challenge that territory. No doubt the market is also growing, but the reason why Asian Paints has corrected from its peak valuations and peak levels is because of the gross margin contraction due to a lot of volatility that one has experienced in the raw material segment. But Asian Paints is talking about expansion. They are setting up a 4 lakh kiloliter plant in Madhya Pradesh at the cost of around 2,000 crore. They've also talked about another 2,500 crore of capex in backward integration. So I think all of this is going to be value accretive going ahead. And our sense is that probably we might have seen burst of the gross margin contraction going ahead. I think as and when even the rural segment tends to improve, which we do expect in the second half, and volumes from there are always better than the urban segment, I think we'll see better numbers. So certainly hold on. We do expect higher levels at least over the next 3 to 5 years, and good compounding from here.
Okay, that is on Asian Paints. Let's also get Rajat in. Rajat, you just heard that call on Asian Paints. Do you agree that this is a good one to hold?
I'm always a fan of Asian Paints. I mean, on declines, definitely our investor can add to his tally of current whatever holding he has got. Chances are that using this weakness, one can actually one might see that the stock coming close to about 2750 or say even 2700. If those levels were to come, definitely that would be another fresh buying opportunity. And I'm not really too concerned about other competitors coming in, because Asian Paints, the way it manages its dealerships, the way it manages supply chains, it's phenomenal. It's a phenomenal company at any level. If you are a long-term investor, you should definitely buy. But those people who are actually looking at, say, Asian Paints to trade in the short term, they would do better to actually wait and let it come down a bit, and then may take an entry into this, because short term may be a bit dicey.
Okay, short term may be a bit dicey. Well, you know, the next query that we have, that's probably going to be the next question with regards to that as well. Veena Kumar writes to us from Bangalore. She holds 200 shares of Infosys, which she's bought at around 1,000 rupees. She's a short-term investor. She wants to know whether to hold or sell. Well, Parthiv, you know, that is the million-dollar question with regards to Infosys. There was a slew of brokerages which have cautioned with regards to Infosys post their numbers that were released. What is your sense? Do you think the worst is probably behind us in terms of a stock performance and it's probably going to consolidate at these levels? Or do you think that it could even hit 1,000 rupees, the buy price of the person, of Veena?
See, if we look into the recent con call commentary of Infosys, the management alluded to the fact that, you know, there was a degrowth quarter on quarter because of few one-offs, and also if you see there was an impact of a contract reversal sort of things. But if I see the finer details, it's not only BFSI which has contracted by 4.2%, even the communication segment has contracted by 7.7%. If you look at the other verticals like retail, that has contracted. So it seems there is definitely some sort of macro weakness. Now it's very difficult to make a call whether it was a one-off in the quarter or there'll be better execution going ahead in next financial year, quarter one onwards. So our sense is that certainly there's a weakness on the whole in the industry. You know, TCS results also came. They were not as bad. Initially, it looked like TCS was not delivering good numbers because Infosys in the past prior 3 quarters had outperformed TCS. But our sense is there's definitely weakness, and these stocks have corrected massively. If you see Infosys, it has corrected by almost 35%, and the current valuations are reverting back to the mean valuations of the past 5 years. So I feel if not further price correction, there could be further time correction. It will take at least 6 to 12 months. So if the investor has a very short-term view, I doubt there is any trigger that can take this stock higher. But at a dividend yield of 3.2%, if one is having a 2 to 3 year horizon, our sense is that Infosys and TCS both look quite good from here.
Okay, that is the fundamental call coming in. Rajat, the problem here is that she is a short-term investor. You know, she's not willing to hold for a very long time. Considering that she's bought at 1,000, you know, the price is not bad, but this is a stock which has already corrected around 20% in this year. What do you do if you're a short-term investor?
Two things, Pavitra. First is the investor you said that the investor bought it around $1,000, right? And she says that she is a short-term investor. If somebody has bought the stock at 1,000 rupees, which was available only around, say, January 21 or earlier, that means she is already holding the stock for more than 2 years. If that kind of short-term investors are available in the Indian market, I feel great. I mean, in that case, there is not much of a problem. But short term, typically we define as only 3 months kind of holdings. Let's say that she is willing to hold for another 3 months. Here, I would give you some pointers, like price pointers. 1300 is the 200-week exponential moving average. Around 1300 it is located currently. If Infosys in any kind of recovery attempt fails to take out the 1300 mark, then definitely Veena should actually book profits, because still she should be getting 300 rupees per share. That's a good 30% gain. That's pretty good. And if it manages to get past 1300 levels, then the next levels to watch out for would be 1450 to about 1500, because 1500 it is unlikely to cross. Over the period of last several months Infosys actually distributed. There has been a distribution in Infosys stock. So 1500 is not to be taken out immediately. It may take at least a year or so unless Infosys posts a stellar performance the next quarter, which to my mind is very unlikely. So if 1300 is not crossed, she is booking profits there. Otherwise, above 1300, as far as it goes, then exit the position. That's the thing.
Okay, all right. So that's the word coming in on Infosys. Definitely an underperformer within the entire IT space and within its peers. But let's get in another query. And this time round, we have a caller, K. Sivananda Devi, calls us from Chennai with a question. She has investments in SBI Life Insurance. Hi, ma'am.
Yeah, hi. Good afternoon. This is Devi
Good
from
afternoon.
Chennai. Yeah, thanks. Thank you, CNBC, for taking my query. I have 40 shares of SBI Life Insurance purchased at the rate of 990 rupees. So I would like to know the outlook for this share, and I can hold this share for the next 6 to 8 months period.
Okay, so
What is the
your
level that I
holding
can
period
exit? Yeah.
is only around 6 to 8 months. You're looking to see whether there's any kind of further
I purchased
upside.
In 2020. Yeah. I purchased in 2020, and I can hold it for the next 6 to 8 months. What is the level that I can exit?
All right, Rajat, what would you recommend?
I would recommend an exit. The level that is to watch out for would be 1175. I don't think it will take out 1175 for the simple reason that there is 20-week and 50-week dead cross. That is, both the moving averages are coming down, and 20-week moving average is going to cross 50-week moving average this week itself, or maybe next week. And after that, you can expect some kind of a correction. But since the 1000-week moving average is located around 1000 rupees, it is unlikely to go below that to maintain its long-term uptrend. So she should seek an exit as close as 1175. Do not wait for it to take out 1175 and further. That's the thing. Since she has a 6 to 8 months horizon, this would be the ideal level to book profits. And in any case, if there is any kind of selling that starts off, immediately seek an exit, because weekly dead crosses are very dangerous.
Okay, got that. Let's also get Parthiv in on this one. Parthiv, you heard she has around a 6-month horizon that she's looking at for SBI Life. So the question is, do you think that this it can see a significant upside in the next 6 months, or is this a good time to sort of book your profits and get out?
Frankly, Bhavita, 6 months is a very short-term horizon. We'll have just 2 quarters, and more importantly, I agree with what Rajat said, that at least in the short term, there is a lack of kind of any sort of trigger in this sector. No doubt, I think post-budget we saw massive correction due to a lot of non-par policies that they were selling, the guaranteed annuity plans, and now that there's a cap on it in terms of the tax structure, so that is why we saw massive correction. But I think there is a possibility that Q4 results could bode well for this sector because of a lot of selling happening before the March deadline. So we might see some traction there in terms of the value of new business growth. But I think any such results and if there is any pop in the stock to the tune of 2 to 5%, definitely an exit would be a good idea.
Okay, Devi, I hope that answers your question and that helps you make an informed choice at this point. With that, we are going to get into a break on the show. But as we do that, here's a quick programming note for you. Unstable market conditions have led to lower demat account opening in the month of March. But the FNO segment has seen a retail investor frenzy, data analysis, and a very interesting chat coming up with A. Balasubramaniam, who's chairman of AMFI. This is lined up at 3:30 p.m. today. So remember to stay tuned and catch it right here on CNBC-TV18.
Welcome Welcome back. Well, there is a renewed interest which has come into a lot of these pharmaceutical stocks, and that continues into today's trading session as well. Divi's Lab, for example, is up around 2% odd. Just want to point out that a couple of these stocks such as Divi's, Gland Pharma as well as Piramal, all of these have been significant underperformers in Q3. So now you're seeing some kind of renewed interest come in. Let's see whether the earnings will actually justify the kind of gains that we are seeing in these particular stocks. But we still have with us Parthiv Shah and Rajat Bose to answer all of your queries this afternoon. And let's get going in terms of the next question that we have. We have Radhakrishnan V, who writes to us from Chennai, holds 40 shares of HCL Technologies, which is bought at 980. 20 shares of LTI Mindtree, which is bought at 4100, and 8 shares of Tata Elxsi, which is bought at 7480. Wants to know the future prospects of his investments. Well, Parthiv, you know, the questions with regards to the entire IT space just don't end. There are so many people who bought these portfolio stocks thinking that they would probably be a kind of defensive play, in terms of the Indian economy possibly slowing. But now we're seeing these headwinds emerge. What is your sense? What would you recommend on this particular portfolio?
I've done a lot of work on this term defensive sector, defensive stocks, and very honestly, all the mistakes that I've made are probably coming out of assuming that a sector or stock can be defensive even when the valuations are skyrocketing. And that is a classic case with the IT sector post-COVID. Thanks to a lot of travel budgets down and a lot of pickup in demand, we saw this entire sector rally and outperform. And even the mid-cap IT companies, the likes of LTI, or for that matter, Tata Elxsi, which at one juncture quoted at 15 times, 17 times, they got re-rated and started quoting it at least 55, 60 times, which even the large cap frontline IT names have never quoted at. So then post which we saw that, the constant currency growths of 17-20% were kind of not sustainable. Any sort of macro weakness in terms of the commentary and the rate hikes that we saw in US and Europe, I think dented the entire sentiment, and even these skyrocketed valuations corrected by 40-50%. Yet I feel that looking at the current macro challenges, it's dangerous to stay put in the mid-cap IT sector, because over there in terms of margin contraction, especially when the biggies are saying that they don't have much margin levers and the wage hikes are going on, the travel budgets are there which have increased, it's going to be very challenging for them and they might further correct. No doubt, I think if the investor has a very long-term horizon, then names like HCL Technologies, LTI Mindtree and Tata Elxsi, they look good. Do not cost average here. Our sense is that there could be further 10 to 15% correction. If you want to stay put in this sector and want to cost average, do it at a lower valuation.
Okay, that is on some of these tech names. In fact, the next query is also once again from the tech space, and this one is on TCS. So Ramesh Jain is writing in from Rajasthan, and he holds 20 shares of TCS, which he bought at 3,500. He's a medium-term investor, and he wants to know whether he should hold or sell. So clearly, he is seeing a bit of a loss there. He bought at 3,500. It's closer to 3,080 right now. So quite a loss coming in on TCS. Rajat, you want to take us, I know we briefly sort of did talk about this in the first segment, but if you want to take us through your call on TCS and also some of the names that we were mentioning earlier, the likes of HCL Tech, LTI Mindtree, Tata Elxsi, is there anything in the IT space right now that you think is good for an investment?
Well, I would mention that first of all, to answer the query of TCS is that TCS can still fall from here and it may taste 29.75 to about 29.60 kind of range. If it breaks down 29.50, then further fall will be there. Otherwise, among the whole of the IT space, what I find is that two stocks. One is Oracle Financial Services and the other one, I personally hold some shares of Oracle Financial, so that's a disclosure from my side, and the other one is Tata Elxsi. These two are not that bad on the technical charts, but if you look at HCL Tech, LTIM, Infosys and TCS, all four are pretty weak, and the weakest of the lot is HCL Tech.
Okay, all right. So that's on the entire IT space. We have another query now. Siva Kumar writes to us from Guwahati, holds 20 shares of ITC, which is bought at an average price of 350 rupees. Short-term investor wants to know if he can expect a 15% profit in the span of 3 months. Well, this is, the rally in ITC is really spoken about, and completely threadbare because it's been a complete dark horse in terms of an outperformance this year. Parthiv, what would you recommend? Do you think that there's 15% more in the next 3 months that we can expect?
So Ekta, I think I'm not sure if from the 350 levels he's looking at a total 15% return, or even from these levels of 400 he's looking at further 15% addition to his returns. But my sense is he seems to be not a very long-term investor. He's looking typically at a particular return profile in the company that he invests into. And of late, I think barring the market, overall sentiment, ITC has done really well. And I think if at all he's looking at a short-term positional bet, then not a bad idea to book some profit. But just to give some perspective regarding ITC's slightly long-term view, I think in terms of FY24 is quoting at around 23 times and FY25 is quoting at around 21 times. It's a fantastic cash-generating machine. The cigarette business, they have garnered more market share thanks to the fact that there wasn't much tinkering in terms of the taxation. In fact, due to the inflationary pressures, they've even taken price hikes, and yet they've maintained their margins. And more importantly, the other segments, which is the hotel, the paper segment, and even the FMCG segment are doing reasonably well. The FMCG segment now with the scale, they are improving the EBIT margins. So I would, if at all the investor has a long-term view, I would still suggest a hold here for at least next 2 years. But again, as it seems he's a short-term investor, no harm booking profits.
Okay, no harm booking profits. He's already made good money, right? It's up 20% in this year itself. Rajat, you come in on this as well. He's saying 15% profit in a span of 3 months. I know that's asking for a lot, but do you think there's room for more upside?
See, technically speaking, ITC is overstretched in the sense that both the daily and the weekly charts, the daily and weekly chart 14 RSI is showing negative divergence, so is the MACD. So from a technical point of view, that there can be a reversal at any point in time. Some correction might happen. As it is, I had purchased ITC long back around say 240, 230 kind of levels. I'm still holding, but the target for ITC from here, if it crosses 403 decisively, then 425, 26 would be the target to look for. But unless it falls below 340, it would not be weak. So 15% from 400 is a tall order at the moment. I would say he would do well to actually take out his profit around say 420.
All right, Raja, thanks a lot for bringing us that call on ITC. So I think both of our guests agreeing there that, the stock has seen a good run-up, and for someone who's looking at it with a short-term horizon, it's probably better to get out now and book your profits. But we are going to wind down on that note. Rajat, Parthiv, as always, thank you very much for speaking with us and taking our viewers through all of their individual queries. With that, from Ekta and me, we are going to wind down on this edition of Your Stocks with news that the markets 50 points in the red for now. We've moved back above 17,600. So we're going to wind down. Remember, you can always email us your queries and we will keep taking them up with our experts. Stay tuned. Closing bell comes up in just a bit to take you through the final hour of trade today.